on that stock. Hiren Ved is joining us, CEO, Director and CIO at Alchemy Capital Management. Hiren, good morning. Thanks a lot for joining us.
Good morning, Anuj.
Hiren, of course, we are just one day, ahead of that big event, the FOMC outcome, right? And there's been so much which is happening in terms of geopolitics, in terms of what's happening with crude prices. So this clearly has been a bit of a tough year, right, for equities. You reckon it could continue like that for the rest of the year?
Well, I think we should, we should be happy that, we're down only 10-12% from the top if you look at what's happening across the globe, right? I mean, I think India is behaving like a strong stock, which corrects less, in a correction and probably bounces back when things get a little better. So I think that, given where oil prices were, given the geopolitical situation, etc., I think, and also I think the markets had become a bit expensive and the correction was long overdue. And I think that's kind of happened. And while, the Nifty or the Sensex may have corrected 9 or 10% from the top, but, the broader markets have corrected far more. Many small and mid-cap stocks have corrected anywhere from 15 to 40%, right? So we have seen a healthy correction in the market. And my view is that, we may be sideways for some time in this market as we negotiate, some of the more medium-term impact of what we've seen recently in terms of higher energy and raw material prices, right? But I think that the big impact because of the event, in my view, is kind of done and dusted for now.
Okay, done and dusted for now. Well, when one event is done and dusted, another one comes through, right? Now we have COVID fears resurfacing, but I guess the market and the economy has learned to live with that. Hiren, hi, good morning. I wanted your thoughts on, some of these new age companies that have been in the limelight for all the wrong reasons. Paytm has been in a lot of regulatory issues lately. Zomato is now investing further in loss-making businesses, something that perhaps the street may not like. There's a big fall in these stocks that we've seen from, their listing days. Would you use this as an opportunity to buy into any of these companies, or do you generally keep away?
So, Sonia, new age has gone to the stone age right now, right? I mean, many of these companies, have realized that it is very different when you do your Series A, B, C funding, as I've said before on your channel, and it's a very different market when you come and face, retail investors and institutional investors once you're listed. So my sense is that we've gone from extreme euphoria to now disbelief in many of these companies, right? And I think that at the stage of the market that we are, I think that there are today better options that investors have in fairly good profitable businesses that they can invest in. And therefore, these longer term businesses, as I've mentioned in the past, that some of them have really built a great business. The valuations were questionable, and that's unraveling now. And investors today have a choice. As I mentioned, that the broader markets, there are many stocks that have corrected from, 15 to 40% for investors to go ahead and buy. And as I had said in the past, that amongst all the companies that the new age companies, many of them that got listed, probably the one which has the best business model is Nykaa, right? So I think, Nykaa will probably do very well over the next few years. They already have a very profitable model. I think the others are still work in progress. So I think there may be a few set of investors who are willing to take a very long-term view, might do that. But I think that today there are better opportunities that investors have. And I think investors have to still understand, and those founders have to probably do much harder work to explain to investors what is it that they are doing in terms of their capital allocation and profitability.
All right, Hiren, enjoy those couple of punchlines there, and Nykaa could stand out from the new age companies. But what about some of these pharma and pharma-related stocks? You know, we went through a couple of phases of the wave one, the wave two of COVID, and thank God they're behind us. But how would you approach some of these companies? Now, pharma in the last month or so is showing signs of making a bit of a comeback. Your view on the space on the whole?
So I think, after the first rebound, aggressive rebound that we saw during the aftermath of the crisis, right, then the pharma stocks actually went sideways and many of them have corrected. Some of them have had to deal with, supply chain issues, raw material, issues and so on and so forth. Some of them were also beneficiaries of, inventory pileup. So they actually benefited in the early stages of the COVID. And then you had a high base effect, to worry about. So in my view, I think as 2 years out, as some of these challenges, get addressed, I think the sector should in generally do well. In my view, in pharma, you can't take a sector approach because every stock is different, and therefore you will have to take a stock by stock approach. But I think that in general, my sense is that the sector should do really well, and some of the leading players are already showing that.
Oh, yes. By the way, the market's seeing quite a bit of short covering now. 16,919, 16,920 is what we have right now, and the Bank Nifty is now at 35,754. So moving towards those levels from where you've seen that short covering on the Bank Nifty. That remember the 20-day was 35,775. We're almost here, and a lot of stocks seeing short covering now. Hiren, so a larger question then for this year, then going forward, what to your mind is going to be a big risk? Because we've had geopolitics, we've had crude, we've had COVID. What to your mind is the biggest risk going forward?
See, I think this year, in my view, we were all hoping that we will finally have 22-23 as a one clean year, where consumers and businesses can focus on full year of uninterrupted, business. And I think that if life was just so simple, right? I mean, we had the Russia-Ukraine crisis in front of us. I think the near-term challenges, at least for the next 1 or 2 quarters as I see it, is that as some of these, raw material price hike and supply chain issues work themselves through into numbers of companies, right? There may be a little bit of a pressure on margins on, let's say for FMCG companies or auto companies, right? So we may have to negotiate that. But I'm hoping that once that is out of the way in a quarter or two, and companies are able to raise prices over the next few months to cover higher raw material costs, I think demand should come back very strongly, and hopefully we shouldn't be able to waste more than 1 quarter of the next financial year and actually get a complete runway. So I think that the only risk is that how companies are able to deal with some of these supply chain issues and raw material cost hikes and work these through over the next couple of months is what is going to be very important. But otherwise, I'm fairly confident that as the economy bounces back, what is going to be very important. But otherwise, I'm fairly confident that as the economy bounces back, demand will come back. There's been a fantastic response to the PLI schemes. I think that manufacturing should bounce back as well. So I think we should be on our course to a very strong recovery in 2022-23.
Okay, on course for a very strong recovery. By the way, if you look at what's been happening this month, I mean, only 15, 16 days are over for the month, but the IT stocks have come back in a big way. So the biggest gainers, Infosys is up 10% this month already. Wipro is up 8%. HCL Tech is up about 6%. Hiren, this is a space that has done exceptionally well in the last year, year and a half. And the commentary from the management indicate that yes, there are some, there are some hurdles like maybe higher attrition, etc. some margin concerns, but the long-term picture is still solid. Would you buy into any of these large cap or mid cap IT names for that matter ahead of the earnings season this time?
Yeah, so Sonia, I think we have, ever since the COVID lows, we've had a reasonably strong allocation to the IT services sector. We believe that they are in a structural up move. And I think that continues. If you look at the commentary of not only the Indian companies, but if you look at the commentary of some of the leading companies globally, like Microsoft, Adobe, etc., I think they're all saying the same thing, that cloud adoption is likely to accelerate, digital adoption is likely to accelerate over the next couple of years. This is not a cyclical trend, this is a long-term structural trend. And I think our companies, IT services companies, both large and mid-cap, should benefit from that. So I think we are still very clearly in a secular uptrend in these companies. Yes, we should be mindful that the valuations that these companies are trading at are now also reasonably capturing that, right? So you may argue that you may not see any further, there is no place for further PE re-rating. But I think that these companies can still compound at the rate at which their earnings will compound. But, we are still very, very bullish on the sector from a long-term perspective. And also, I think the little bit of the weakening of the rupee, given what we've seen on the trade deficit side, I think it only works to their advantage.
Okay, all right, Hiren, thanks so much for stopping by and filling us in with your views. Look forward to chatting up with you rather soon. By the way, it's been a